Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 7th of June. Now, let me just try and give you a little bit of guidance here on what's going on. Now, the week has been dominated by the upcoming G7. Now, there's so much rumour and innuendo around the trade tensions and the trade tariffs with China, who aren't even involved in the G7, but then the European Union, Canada, Mexico, everyone's really pissed off. At the same time, there's a fair bit of speculation around, and this is what you've got to get used to as well. Media outlets can sort of drum this stuff up. There's speculation that the euro is recovering on the prospect, right? This is all hearsay, that the ECB may roll back the stimulus. Now, they've been talking about this for some time. What they're talking about is the ECB actually providing a specific date when they're going to start doing that. Now, I think that's a long shot, but it doesn't really matter too much because what we're seeing is euro starting to climb to the top side. It just gives reason for the move higher, right? It's a bit of a short squeeze. Nothing's happened. Italy sort of looks like they're sorted their rubbish out for the moment. I think that'll come back to bite the euro later on. But all in all, euro is heading, looks like it's probably 118.5. It's a bit speculative. But if you look at the technicals here at the moment, we had some good GDP figures out of Australia yesterday. Aussie does not have the momentum, and that's what you get from these geopolitical events. All the currencies are losing momentum, right? If anything, I wouldn't call the euro momentum up. Well, the short-term bias is up, but the moment it hasn't got strong momentum. Same with sterling. Kiwi is just following suit. And see the price action here. I just delete a few of these things. Look at the price action around these trend lines. This is geopolitical markets. False break both sides. If anything, euro was a little bit cleaner, sterling, and then you've got, as I mentioned yesterday, dollar yen just minding its own business, going about doing its own thing. Whereas dollar CAD, it's caught up in about 3 or 4 different events, and it's just whipping about and then comes back and sits back in the range again. You can see these short-term moves, spikes, and then basically it's just tracking around 129.5. All right, so where does that leave us with the technicals? Well, it's just basically, it's the same thing all week, okay? The start of the Asian session, you would have adjusted your trend lines. Now, these resistance levels aren't sort of super, but it just goes off where the current market is. Euro, I'm a little bit conscious that I'm a little bit late getting this up. So you would have, euro is just poking up above 117.88. I still don't think we're going to get any substantial moves until we hear some more details out of the G7. But for the start of the Asian day and the start of the whole trading day, this is where your levels would be. This is what the trades at the banks would be doing. So you can see here dollar CAD just poking down below that trend line. You just want to correct that low, make sure it's on the thing. Widen it out so you can see what's going on. And that's it, right? There's not much going on. Basically, there's a little bit of a US dollar squeeze. Now, if I just come back and show you that for a second, that's a good point. So we knew at the start of the week there was no US numbers, right? So the US dollar is not going to be charging forward, with all these really strong numbers day in, day out like we've had at the start of the first week. So the dollar is starting to it's just drifting lower. And this is probably more on the back of, once again, stronger euro than weak dollar. Okay, there is obviously a lot of tension around that trade talks and stuff, but this is a strong euro situation. You can see here on the dailies, it's just drifting down through that trend line. And that's going to be enough to shake out a few longs, right? Just bear in mind, as I said, this is more strong euro than weak dollar. The US 10 years is still, they're a bit all over the shop, but they are still marching higher again. I know it's a little bit lower than yesterday, but we are sort of heading back, higher than yesterday. So the US Treasury is higher. That should lead to a higher US dollar. So I think once these trade tensions are all sorted out, we will see that come into play. Now, what's all this news and mumbo jumbo that I'm talking about? Well, we're looking at, here's the sort of general speculation. This is what you've got to get used to. It can really piss you off if you get too focused on it. It's like rising bets. They're not even bets. It's just rumours that the ECB may announce, right? So basically, you've got to focus on what the news is and where the market's going. So if the market's getting long euro or squaring up their shorts on the fact that the ECB may provide a specific date, well then, if they don't, then that's a massive selling opportunity for euro. And that's why we need to know what is moving the market now because if that news changes in the future, you know exactly what to do. So the preparation from here is, okay, so the market's getting long euro and the fact that the ECB may announce when they're going to start winding back their program. Well, that's really great for us because we now know that's a trading opportunity. If they don't give us a specific date, euro gets belted, right? That's how you got to keep that in the back of your mind as we approach the next ECB meeting. And that's pretty much it. You look around the, the general news, it's just all rubbish. Brexit, they're bringing up Brexit, they're bringing up the trade stuff. G7's still there. Canada climbs on trade data. I mean, and it's all about the G7. All right, so there's not much we can do about that. Now, what we can do is, though, we can focus on what's actually tangible in the market right now, and that's actually looking at the major data. Now, I've just updated the calendar. I had some German numbers in here as high impacting. Yeah, the fact is they are high impacting if they do come out extremely variant, but that probably goes for a lot of data. Now, the major data I'm looking at today is the Halifax UK House Price Index. Now, I used to live in the UK, and actually I had a home loan 20 years ago with Halifax. They were the biggest home loan or home lender many years ago. Now, Halifax Bank of Scotland now, this is an important number, and if there's a significant change in the house price there, you can expect sterling to move aggressively, right? And the way sterling's moving to the top side, strong numbers, we may see that accelerate. The weekly initial jobless claims, the primary fact that we haven't had much US numbers this week really sets up to give, they will focus on this probably more so than usual because it's the only real US number around, and they will attach themselves to it. So if there's any sort of variance there, you should see the US dollar move one way or the other. And then really the next couple of days really belongs to Canada or the Canadian dollar. We've got Polo speaking. Now they are expecting a potential rate hike out of the Bank of Canada next month. Don't forget we've got NAFTA. We've got the and a whole heap, but they're just caught up in the oil pricing, all sorts of stuff. But the main opportunity will be Friday's employment data. So they're the four major releases I can see impacting the market right at the moment. And just looking at the correlations down here, you can see the Aussie, it's the odd one out. Now, it had some strong GDP numbers yesterday. It's lagging. We just had some trade balance figures, which were slightly weaker. They aren't really significant. But you can sort of see here where, these four currency pairs, they are quoted the same way to the US dollar, So basically they should be correlating. This puppy's out of whack. So if you're looking at the Aussie and looking to get long, just bear in mind it's out of correlation with the other pairs. All right, and that's pretty much it, guys. There's what you've got to do is really shape your week and understand where the major opportunities are, because this is one of those testing weeks where you can get caught up in a little bit of, frustration. There's no major moves. When we come back and look at the major pairs there, there's nothing really much to hang your hat on. But if you do come back to the major pairs here, let me just come over here to, you've got to keep looking forward, right? And where I see the next big opportunity is potentially on the yen crosses. Now, dollar yen, okay, over here is just going on its merry way. Just check out the setup here on the yen crosses. They are all starting to look gorgeous, right? Do they all shoot to the top side? I'm not so sure they keep going in this current environment with all this trade tension. I think the best trades are going to be on these yen crosses. Potentially, if something like, say for instance, the US North Korean situation doesn't eventuate, well, you'd expect dollar yen to, like, everyone to buy yen, the safe haven trade, so dollar yen to break lower. We've got some pretty good setups here, good trend lines to work with, whether they do keep trending or whether they do break lower. So I'm looking at some potential opportunities here on the yen crosses. So I'm just watching that. They are building up. They are forming good shape for potential moves down, and that's what you need to be doing. So don't get frustrated just staring at the markets and thinking, well, what's going on here with the other majors? Where's the next best trade? Well, at the moment, because of all this G7 crap, we don't have any momentum to work with. All right. So when you do start to look at the markets that way, it'll stop you getting frustrated. Number one, I haven't updated the whole snapshot yet. We are still working on these arrows. There's an update with Google and it's screwed up a few things. But the general thing you want to just take out of this, and I know there hasn't been any sort of major changes here since yesterday, is the fundamental outlook, right? These major pairs don't really have any major bias. To me, the only one still with clear bias is the dollar, and that's up. It's not going up at the moment, so sit back, relax, and wait for it to kick into gear. Technicals, well, I'll update that in a minute. There are a few pointing higher. Aussie, Kiwi, Euro, Sterling all look like they could be going to the top side. I'll update that, as I said, very shortly. So we've got we'll have some technical outlook, but we don't have any fundamentals, and this is where the direction comes from. That's why trading's a little bit frustrating at the moment. All right, guys, that's a bit of an extended update from me. I just want to sort of put you at ease with what is going on in the market, especially around the general news. It can be a little bit hard to work out where the best opportunities are, but just relax. This week, it's not necessarily a write-off. I've actually sort of ticked away some decent cash on the side, but the next really good opportunity is going to come when we have some direction on the US dollar or one of the other major pairs. And hopefully that comes out of the G7. All right, chaps, have a good one, and we'll catch you in the trade zone. Cheerio.